Greetings everyone. Today we will be discussing how to profit from a recession and turn a crisis into an opportunity. Now you might be thinking, a recession really? That's an opportunity? Indeed it can be. While it is true that recessions often bring about economic hardship, they can also open doors to untapped potential. We're going to delve into the world of real estate where properties can often be bought at significantly lower prices. We'll also explore the stock market, which can present a plethora of opportunities as investor fear causes stock prices to plummet. And let's not forget about strategic investments, where the right moves can lead to substantial gains. In this journey, we'll reveal how a recession, when approached with the right mindset, can be more than just a financial challenge. It can be a treasure trove of opportunities waiting to be discovered. Navigating the stormy seas of a recession can be challenging, but with the right mindset, it can reveal a treasure trove of opportunities. During a recession, the real estate market may appear to be sinking, but those with a keen eye can spot valuable opportunities. In a recession, people are more willing to sell their homes at lower prices. This is not a random act of desperation, but rather a reaction to three main motivations: death, divorce, and default. Death can lead to a sudden need to liquidate assets. Divorce often results in the sale of a shared home. And default? Well, that's when homeowners can't keep up with their mortgage payments, leading to foreclosure. The impact of a recession on the real estate market is twofold. On one hand, there's an increase in the number of properties on the market. On the other hand, there's a decrease in the number of people interested in buying property. This is because during a recession, many people are either losing their jobs or fearing that they might lose them soon. However, if you're in a position of financial stability with healthy capital and a good credit score, this could be the perfect time to invest in real estate. Lower prices mean you can get more bang for your buck, and with fewer buyers on the market, there's less competition. Now it's essential to remember that investing in real estate is not about taking advantage of others' misfortunes. Instead, it's about recognizing opportunities and making the most out of them. And let's not forget, by buying a property, you might be helping someone get out of a difficult financial situation. So how do you seize these opportunities? First, you need to do your research, understand the market, know the neighborhoods, and keep an eye on economic trends. Second, be patient. Investing in real estate is not about making quick bucks, it's about long-term gains. And finally, make sure you have the necessary capital and credit to make a move when the time is right. This means saving money, maintaining a good credit score, and possibly partnering with other investors. Remember, a recession can be the perfect time to add valuable real estate to your portfolio. This is not about exploiting a crisis, but about understanding the market dynamics and making smart, informed decisions. So keep your eyes open, your mind sharp, and your capital ready. You never know when the next opportunity might come knocking. The stock market during a recession can be a scary place, but it can also be a goldmine for savvy investors. A recession often incites fear among investors, causing them to sell off their stocks. This fear-driven sell-off leads to falling stock prices, creating a buyer's market ripe with opportunities. Let's take a moment to understand why this happens. It's simple, really. People start to panic. They see their investments shrinking, and they fear losing everything. So they sell. And when everyone is selling, prices drop. This is investor psychology at its most basic. And yet, this is precisely the moment when the greatest opportunities arise. It's all about timing. When stock prices fall, companies that were previously overvalued become affordable. These discounted prices present a prime opportunity to buy in. Think of it as a grand sale where everything is marked down. Now, this doesn't mean you should buy just any stock. It's crucial to conduct thorough research and invest in fundamentally strong companies. These are companies with solid business models and robust financials, companies that can weather the storm and emerge stronger. A classic example of this is the S&P 500 during the 2008 financial crisis. The index lost more than half its value from peak to trough. However, those who had the foresight to invest at the bottom saw their investments multiply in the years following the recession. But remember, investing during a recession is not for the faint-hearted. It requires patience, resilience, and a strong stomach to weather the volatility. But if you play your cards right, the rewards can be substantial. In essence, a recession is a time of great upheaval, but it's also a time of great opportunity. It's a chance to buy quality stocks at discounted prices and to build a portfolio that will serve you well in the long run. So don't let fear guide your decisions. Instead, turn the tables and use the recession to your advantage. In the words of Warren Buffett, Be fearful when others are greedy and greedy when others are fearful. Even in the face of a recession, certain companies manage to thrive and even grow. Let's dive into some examples from the past, specifically the 2008 financial crisis, to illustrate this point. During that time, Groupon, a company that offers deals and discounts, found its footing. This was largely due to its business model that appealed to consumers looking to save money during tough times. Similarly, Walmart, a multinational retail corporation, saw its sales increase as customers flocked to its stores in search of affordable goods. It's a known fact that during a recession, the appeal of discount retailers tends to grow significantly. Dollar Tree, another discount store, also experienced a surge in sales. The company, which sells items for $1 or less, saw its stock price double from 2008 to 2010. This is a clear example of how companies offering lower prices can thrive during an economic downturn. Yet it's not just discount companies that can prosper. A company like Hasbro, the toy and board game company, also enjoyed success during the 2008 recession. This was due to the fact that despite the economic climate, parents were still willing to spend on toys and games for their children. And let's not forget Netflix. During the 2008 recession, the company's subscription-based model resonated with consumers looking for affordable entertainment options. As a result, Netflix experienced substantial growth during a time when many companies were struggling. These examples show that even in a recession, opportunities exist. Companies that understand consumer behavior during economic downturns and can adapt their business models accordingly have the potential to not just survive but thrive. It's important to note, however, that past performance is not indicative of future results. Each recession is unique and impacts different sectors and companies in various ways. Therefore, while these examples provide some insight, it's crucial to do your own research and consider multiple factors when making investment decisions. Identifying such companies and investing in them can be a profitable strategy during a recession. A recession is not a time to panic, but a time to strategize. As we navigate through the ebb and flow of economic tides, it's crucial to understand that investment strategies during a recession differ greatly from those in a booming economy. The focus shifts from aggressive growth to preservation of capital and income generation. Let's delve into a few strategies, starting with real estate. The allure of real estate is its tangible nature and the potential for rental income. During a recession, property values often drop, presenting an opportunity to snap up assets at reduced prices. The goal here is twofold: generate a steady stream of income through rentals and wait for the market to recover to sell for a profit. However, this strategy requires significant capital and a good credit score. Next up, we have the stock market. Recessions can send investors into a frenzy, leading to a sell-off of stocks and consequently, lower prices. This is when you swoop in. Blue-chip companies, that is, established companies with a history of stable earnings, become attractive during these times. These companies have the resilience to weather financial storms and usually recover strongly post-recession. Finally, let's talk long-term growth. A recession might seem like a strange time to think about growth, but remember, every cloud has a silver lining. Companies that offer lower prices or capitalize on changing consumer behaviors can thrive during a downturn. Investing in these companies requires careful research and a keen eye for spotting trends. But here's the golden rule of investing during a recession: patience. It's all about playing the long game. The market will recover, it always does. The key is to stay invested and let your investments grow. Remember, the goal is not to make a quick buck, but to position yourself for financial success when the economy rebounds. It's like planting a seed during winter, nurturing it, and then reaping the fruits when spring arrives. Remember, the key to investing during a recession is patience and strategic planning. In conclusion, a recession, though challenging, presents numerous opportunities for profit. As we've discussed, real estate often becomes more affordable, offering a prime chance for those with healthy capital and credit to invest. The stock market, while volatile, can present discounted stocks ripe for the picking. We also highlighted how certain companies, even in the midst of economic downturns, manage to thrive. These companies often offer lower prices or discounts, making them attractive to consumers tightening their belts. And let's not forget our discussion on investment strategies. Preparation is key. Whether it's investing in real estate, purchasing discounted stocks, or betting on recession-proof companies, strategic planning is crucial. But remember, patience is just as important. Let your investments grow during the recession period. The goal isn't to make a quick buck, but to build a solid foundation for long-term financial success. Thank you for joining us today. We hope this guide will help you turn the next recession into a prime opportunity for profit. Before we wrap up, we'd like to extend our gratitude for your time and attention. It's a big world out there, filled with potential and opportunity, even in the face of economic downturns. If you enjoyed this video and found it insightful, give it a thumbs up. Feel free to share your thoughts or experiences in the comments. And don't forget to hit the subscribe button for more content that helps you navigate the financial landscape. Until next time, stay savvy and keep an eye out for opportunities.